Hello everyone, K Kim here from the Traders Club, and thank you again for tuning in. Today is, I'm looking for the date here, March 11th. It's around 7 o'clock here in the Twin Cities in the Central Time, and it's quite interesting what happened today. So we'll go ahead and look at the market. I'll try to forecast for the remainder of the week, and we're trying to forecast until next week as well. Something we do on a weekly basis. We'll go ahead and look at the indices. It's interesting to note, though. You can see how we do have kind of a weakness on the big three indices: the Dow, the Nasdaq, the S&P 500. But interesting to note that you can see the Russell is positive today. New York Stock Exchange is flat. Financial sector positive, microcaps positive, transport did very, very well, and the mid caps is also positive. I don't know if I've seen something like that happening in a while, actually. So it's very, very interesting what's happening here. And obviously, in the minor term, we're going to see certain divergences. We're going to see certain discrepancies between the indices. So it doesn't surprise me. However, it is very, very interesting. So we'll talk about it. And then, like we do on a weekly basis, we will look at Tesla and Apple. So those are the ones we'll look at. We'll end the video tonight. Next week, however, I do have planned to host live midweek update. If you haven't signed up, please feel free to sign up at twotradersclub.com. You sign up once, you'll be signing up for the whole year. So you feel free to come to next week live event. You can come out, hang out with me. You can just interact with me. Those live events tends to go much longer. With a lot of questions and things. So it's just definitely a place you can come out and just hang out with me. And then again, I love to just have a conversation with you and talk stocks. So anyway, so let's go ahead and look at S&P 500. And obviously, as soon as we lost 1020 MA here on this day, and lost this resistance level, several days ago, about 208.50-ish level. Once we lost that level, benefit of doubt no longer went to the buyers in the minor term. Okay, everybody has a different interpretation on this minor term, intermediate term, and primary term. So please keep in mind, I think most day traders or short-term traders will call this is intermediate term. For me, this is a minor term. When I say minor term, week, 2 weeks maybe. Intermediate term, I'm talking about, at least several months or so. In the primary term, obviously, you're looking at the primary trend. So keep that in mind. So this is a primary term uptrend. Intermediate term, we're talking about, the ups and downs within a primary term uptrend, which is, could be 3 months to 5-6 months. Minor term, I'm talking about these pullbacks within intermediate term that could last 2 to 3 weeks. So that's how I interpret minor, intermediate. So just so you understand, when I say minor term, I'm not talking about next few days. When I say so, benefit of doubt continues to go to the sellers in the minor term until I would have to say that we have to reclaim 1020 MA here to the upside. So until then, I would have to say the benefit of doubt again goes to sellers. But something that I've been talking to you guys about since December, January, and February, even these midweek updates on these days when I had to do these videos, I continue to tell you guys that benefit of doubt continue to go to the either neutral or to the buyers in the intermediate term, because we are still in the vicinity of a higher low, or you want to call it a territory of a higher low. And so what I've told you here, I'm going to tell you here, yes, we are seeing the minor term weakness. Yes, that is concerning in the minor term. Again, minor term. However, we are still in the vicinity of, a territory of a higher low. So this is a low. Again, this low is higher than this low. That's a higher low. And this this high right here is higher than that high, which is higher high, right? So that's how we, that's a what? That's a definition of an uptrend. As long as we cultivate that, as long as we establish that, we're in an uptrend. It doesn't matter if you have a bearish divergence on MACD. It doesn't matter if you have all kinds of insinuations or signals or any kind of, you know, certain certain signals overlaying charts in back 1825, whatever it is, it doesn't matter. As long as we continue to cultivate, we do have to give benefit of the doubt to the buyers in the primary and in the intermediate term. Things will be changing. I'll tell you when the things will be changing. If the bears bring it down and then bring it up and then bring it down again and then start to what? Cultivate and establish certain lower lows and lower highs, then that might be a commencement of a downtrend, right? It might be inauguration of a downtrend, but we don't have that today. So you know what? As of today, I would still have to say intermediate term and primary term benefit out continues to go to the buyers. I mean, you know, you can put all kinds of fundamental data into it. Well, you know, the investors are concerned because, you know, the Fed is going to rise, you know, increase, you know, the rates, the interest rates, right? Well, that concern hasn't changed. How long has it been that, you know, investors have that concern? So what has changed since, you know, last 3, 4, 5 months? Fundamentally, nothing. Nothing has changed. We're still in the same place with the same fundamental data. So what has changed technically? Well, technically what changed was we have continued again to cultivate higher lows and higher highs. And as of today, do we know that it is going to cultivate a higher low at this point? Well, we do not know that. Nobody knows for sure exactly or truly or 100% guaranteed that where the market is going to go. All we have is a probabilities. And as of today, when we create higher high, and when we pull back from that level, it has higher probability. It is pulling back to create a higher low. Again, do we have any kind of, you know, indication to conclude as of today that we're seeing minor term reversal? We do not see that. We don't have any of that as of today. Even this candle does not suggest any of that, right? So at this point, you know, I cannot say that the buyers are going to show up tomorrow. I cannot say that the buyers are going to show up Friday. But what I can say is that as long as we can stay above this level, you know what I mean? And I think the worst case scenario that buyers can or the sellers can possibly fill this gap. This is a gap area. And a lot of times when gap area gets filled, it becomes either support or resistance. Same thing happened here. You can see that this was a gap right here. That has been filled, and then that acted as resistance, right? And again, you know, inversely or you know, same logic goes in here where this rising uptrend or rising gap or the gap up, this was a gap down, acted as a resistance. So gap up, gap fill could act as support, and I think the worst case scenario, we might even come down to that level and possibly gap back up here. And again, I wouldn't know that until I see certain, you know, these, I need to see it. I need to see the data to tell me that we're going to bounce from that level. That is a potential support level. If I throw a Fibonacci here real quick, just quick, you know, Fibonacci analysis right about here, what we can see on S&P 500 is that we just gotten below the 50%. So this is what I call Fibonacci retracement zone, FRZ for short, right? So as long as if we stay above FRZ, it is a territory for a higher low. So, you know, you can see even below the last level of FRZ, we do have that gap area. So I think this is going to be the last level. I think if the bears, though, bring it all the way down here and creates an equal lows, I think that will be a concern. I can't say that for sure that is going to be an early signal for the market is finally topping out. We need a full confirmation in this market. I've been talking about how initial confirmation is not enough. We need full confirmation. So this will be where I'll be start to concern start to be concerned about the market, but not in a panicky mode, or not, start freaking out that this market is go there. However, are we down here today? No. This is where we're at. So there's a lot of things can happen. You can see we're right on that 100 SMA. 100 SMA has been, that strong support level. Again, I wouldn't be so obsessive with where the 100 SMA is at. You got to understand the rising 100 SMA is more important than where it's at, because you can see right here, we got slightly below the 100 SMA. However, we were in that 100 SMA vicinity. Same thing here, we gotten slightly below 100 SMA here, 100 SMA here, we gotten slightly below that, but it was the rising 100 SMA that gave us that the trend is continuing. You can see 100 SMA, 100 SMA. You can see right here, we did get below 100 and 200 SMA. However, we got right back up here, and then it's interesting to note that 100 SMA started to act as support again. It wasn't right at 100 SMA, but it was the vicinity that was important. So we're right on that 100 SMA today, so it's going to be the vicinity that is going to be important, because hey, how many times that 100 SMA, that vicinity, act as support in the past? So this is, it's not that everybody's watching 100 SMA, all the investors and traders are looking at 100 SMA. It's not that. It's just that people, when we had a certain pullback, and there's certain people just, they felt like buying here, and then they made money. They felt like buying here, 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 they made money. You get to the point. You get the point. So they felt like buying here, they made money. They felt, so this is the vicinity that people are feel like, you know what? I feel like buying, because in the past it's worked out for me. So hey, let me just do it again. So that's why these technical level works, not because everybody's watching 100 SMA. I hope you guys understand why technicals are important, because it gauges people's psychology, traders and investors' psychology level. So those are the levels. So you can see. These are the level. You can see with the 10 and 20 EMA crossing, obviously, that selling pressure in the minor term is intensifying, and I have to agree with that again in the minor term. But I still have to say that these levels, there are a lot of levels for support. On the last level, again, that I want to mention to you guys is that this is what I call resuscitated uptrend or rising channel uptrend support. This is what I call resuscitated. Why resuscitated? Well, it has been compromised. The integrity of the support, you can see support. That support has been, that rising channel uptrend support has been compromised here, and then it started respecting it yet again. So it has been resuscitated. The buyers came and did some CPR and brought it back up here. So now you can see where we're at today. So I've just given you all these support levels that buyers need to break to crack this market. Can the buyers do it? Yes, they can. Anything can happen. This is life. However, as far as the probability is concerned, we don't have any kind of topping pattern. This is just a pullback. And in the past, if we just look at this move right here, bears really didn't succeed. They were not able to succeed in this uptrend that this ferocious rising uptrend that we had. They were not able to succeed because without major primary topping pattern, it's really gonna hard for them, the sellers and the bears, to crack this market. And so, we don't have that topping pattern as of today. And all we have is this little pullback here. So I'll be interested to see what's going to happen next few days. I have to let you guys know that next few days, the volatility probably going to continue. I think the selling pressure is going to continue. What you want to look for is some kind of slowdown. If you're buyers here, if you're a seller, or if you're, you're more of a long-term guy like me, then what you want to look for here is a certain slowdown move, certain pause, certain sideways move, because sideways move does not help the sellers. You can see that this sideways move, right? The 3 days consolidation, inverted hammer, reversal pattern there, bullet, or this is more like a tweezer bottom there. You can see inverted hammer there. So these certain 3 days, 2 days, 4, 5 days consolidation pattern is kind of what I'm looking for. We may get a V shape as well. So again, because we're on a bullish uptrend in the intermediate and primary term, it favors the buyers even at this level. Even at this level, it favors the buyers in the intermediate term. Minor term, shakeout will continue. I think the rest of the week, we're probably not going to see much happening unless there's some kind of unthinkable huge bullish move. But again, I will need to see at least 2-3 days to confirm. One day a bullish move, you really never know, what that's going to bring next day. So kind of what I'm looking at is a couple days, several days of bullish, kind of a sideways move, or maybe few days of kind of a pause, and then kind of a gap up move like this, and then that gap up could be that breakaway gap, and then bring it back up here. And if we do that successfully, buyers have created another higher low, which means there's a high probability that it is going to create another higher high, which it has been doing for the last several years. So again, let me go to look at, I just spent 15 minutes, so I did all my analysis, kind of a full technical view, the minor, the intermediate, and the primary term view on S&P 500. So I'm not going to spend too much time on these indices, so I'm going to go through them very, very quickly here. NASDAQ, pretty similar. We're kind of getting back to this level here. That's the level of support, higher high, higher low. We are still in the territory of what? Higher lows and higher high, which means it has a high probability that it is going to create, the higher low here in the intermediate term. And obviously in the minor term, it does look bearish. Same with Dow Jones here. We stayed above this level a little bit. But however, we're still in the territory of higher lows and higher highs, which means when we have these higher lows and higher highs, though we have shakeouts, though there are concerns, buyers are still in control in the intermediate term. In the intermediate term, buyers are still in control. Minor term, obviously bears are in control, but we're talking minor, so things can change pretty quickly. Otherwise, we could possibly have another, couple months or so, maybe a month of consolidation. But I in my opinion, because we've had that consolidation here on the indices for 2-3 months here, so I think we more likely see some kind of V shape or kind of a 3 days pause and then getting back up here again. I'm not saying that's going to happen tomorrow, but we may see certain signals possibly early next week. Again, it's interesting to note that the Dow and the NASDAQ and Spider are red. However, the Russell 2000 is green. I don't think I've seen that in a while, so it's very, very interesting. Russell, again, something I've been talking about is Russell, in my opinion, man, Russell is going to be the key index for 2015, and I've been talking about this. I wrote an article about it. I've been harping on it. So I really think that I've been really tracking the overall index, overall market with Russell 2000 index. I really think because the huge consolidation that we had here, this is a true bear trap. Okay, you want to talk about traps? This is a true bear trap. Anyway, so with the consolidation we had since 2000, late 2013, all the way to 2014, and then after that cultivation of higher lows and higher highs, I think that the Russell is ready to be a leader again. And so again, you can see we're still in the vicinity of higher low and higher high, and even with the weakness of the NASDAQ and the Dow Jones and the Spider, you can see Russell closing with the bullish candle there right on that 50 MA, and then that rising or that horizontal support there as well. So you can see also we kind of have the rising uptrend right at that level, support, 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 and support. So that is an established support with the 3 points here, here, here. So now we're kind of holding that level. So question is the S&P 500 going to drag down the Russell, or is the Russell is going to bring up other indices, right? We'll know about it, I think, maybe middle of next week. So next week, live midweek update that I'm going to host. Please come by and we will talk about it. We'll follow up on this. We'll follow up on, did Russell bring the market up, or did S&P 500 bring the Russell down, right? So we'll talk about that. Again, it's also interesting to note that financials is holding here, though we are we're still below 10, 20, 50 MA here, so that could possibly be some kind of a, bear flag. We don't know as of today. That's the thing about it, is one day doesn't tell us a whole lot. Whoops. Yeah, so one day doesn't tell us a whole lot, right? Because can this be bullish Hurami? Yeah, so you can see the big candle. We closed in the middle of it. That is a bullish Hurami. However, that was a bullish Hurami too that never got confirmed. So what we need is a confirmation here. This can become bear flag as well. We don't know it. Again, we don't know as of today. We will need more candles to show up so we can able to analyze it correctly again. But just that other indices closing red, holding up positive, that is very, very interesting. I think today's star is the transport with 1.16% gain. That is very, very interesting to note here. Transport, we're kind of still in this kind of consolidation pattern, and that can possibly be certain topping pattern or some sort. But you know what? We've seen that kind of shenanigan happening before. I mean, we can see we almost saw some kind of a head and shoulders here that never played out. Maybe some kind of a triple top or some sort never played out. We had some kind of a triple top here, never played out. Maybe some people calling out the massive double top. We even had an initial confirmation that never played out. So why are we going to look at this and say, oh my goodness, Kay, look at that thing. That is going to bring the whole game. Please, we don't have the data today for this to be completely confirmed. You need to see this happening, and you need to break below this level. This is a level where you should be, you want to freak out, you want to start panicking about this market. You need to see here about 132 with this a lower, massive lower high. Until then, we could have this little, initial breakout and then just goes right back up. Something we've seen here, right? Something we've seen like here. So as far as that pattern is, hey, that might be something, but you know what? Let's not worry about it until we see a full confirmation. But what I want to kind of focus on here is a minor term that this is what we categorize as a one white soldier candle. As far as a candle pattern is concerned, it's probably one of the strongest bullish reversal candle. Again, I'm not talking about the candles with the 2-3 double top, none of that. If we're just looking at a one candle like bullish Harami, bullish engulfing, hammer candle, shooting star, all of that combined, bullish one white soldier is the strongest out of them all, right? So, but again, needs a follow through, because that can become a bear flag if we start to hang around too long and then come down, right? So again, if this thing starts to reclaim 10-20 MA and start to see a follow through next few days, then that indeed was that one white soldier candle, right? So it's interesting how transport did very well. Same with the mid caps. Look at this mid caps here, pretty similar. Mid cap is actually completely respecting the technical level here. All resistance becoming new support right on that 50 MA. I won't be surprised if we're respecting perfectly that Fibonacci level as well. You can see I just kind of looked at this. Let's do this right here, so you can see we are respecting right on that 38.2% retrace. Again, don't worry about the numbers. 38.2% right there too. So again, but we do see 10 and 20 MA crossing to the downside. So until we see that getting reclaimed by the buyers, benefit Dow still goes to bears in the minor term. But again, looking at the mid caps, very similar looking as a Russell though. What we had this giant inverted head and shoulder, and then that has been confirmed. And so okay, so now we can see that might be a neckline retesting. Neckline meaning this is an inverted head and shoulder. This is a neckline, right? Acting as a resistance all throughout. So this makes sense. This might be why we're seeing certain certain divergence and certain discrepancies between the indices. So you can see mid caps and probably the Russell that with this neckline here, we're holding this level, that level acting as support today. If we break higher from that level, that will be a full confirmation of this inverted head and shoulder there, right? This is an initial confirmation. When it pulls back to retest that old resistance as a new support, and we break higher and creates a new high, that will be a full confirmation that this guy right here, that big inverted head and shoulder guy, he's in charge, and well, let's not call him he. That's kind of weird. It is in charge, and you can do a little bit of a target analysis here. Measure this, measure that. That's probably where the mid cap's going next several months if we do get a full confirmation there. So again, as I look at the indices today, as I completely analyze all the indices, minor, intermediate, and primary term, I would have to say yes. The minor term, it is concerning. I give you that, right? But intermediate term and primary term, buyers are still in control. There's certain shakeout, there's certain uncertainty, there's certain news, there's certain things going on, and there always will be. They're never gonna be. Market is just gonna be. We're always gonna have a bullish day, and everything's great. Economy's always great. There's never interest rate going up. The job report always great. People are buying houses. There are more jobs creation and all. No, there are always gonna be certain things happening, and because of that, the market's gonna have its ups and downs, and we have to understand its ups and downs, right? And that's a part of the market. That's a part of the game, and so we have to look at it as that's just what's gonna happen. This market inevitably is going to, right? It's going to have its pullback. So in my opinion, if you ask me what I think this pullback is, I think it's just a pullback. I think it's just a pulling back, and with the certain things going around fundamentally, there's certain uncertainty, so there's a little pullback there. But I think that still major investors and long-term traders, I think they're still holding their positions, and I think they're getting ready to buy some more after pulling back, and that's what I'm doing actually. I'm waiting for it to have a confirmation of a bounce, and I'm probably gonna buy some of the positions they were holding. They were long there, so I think this pullback is kind of a healthy thing in my opinion. Are there certain insinuations, Kay? Are there certain things? Are there certain signals that is saying that there's a potentially market correction? They're always signal. We've seen weekly bearish divergence on S&P 500 for years. Not years, maybe a year. That never really truly played out. It is still there, So without the substantiation from the price action, we can't put too much weight on it. Weekly divergence on MACD, on RSI and MACD, on S&P 500, it has been there, if I can remember, maybe a year ago, and it's continuing on without this market actually crashing, rolling over. Because of that, there's always certain signals going to be there. That's why you must understand how to properly use technical analysis so you can profit from, and apply it and use it as a right tool for your trading there. So again, minor term bearish, intermediate term bullish, primary term bullish, right? And next Wednesday we'll follow up with this, see what happened. What happened to those indices. We'll look at these different indices as well next Wednesday on live midweek updates, so feel free to come by there. Let me look at Tesla here real quick. Tesla did have 1.8% gain today. However, this again, since last October here when we cultivated head and shoulder, we had a weekly bearish divergence, what I call 3 peaks bearish divergence. I've been warning. I wrote 4 articles saying that warning signal, flee from Tesla, do not engage in Tesla, and because as we continue to cultivate lower highs and low lows, we're still in a downtrend. Are there certain signals? Yeah, we had bearish bullish divergence here. However, we need price action to substantiate that. How? What we needed to do is kind of break above this resistance and start cultivating higher lows and higher highs. And well, we didn't do that, did we? We are still in the lower high. We're not creating lower lows. So that could be a little signal that, that buyers can look forward to. But again, if this becomes a bear flag and we make new low, that's a trouble. That's a trouble for Tesla, because we continue to create lower lows, right? And it's interesting, when we go up from the lower low, it is going up to create what? Lower high. We're not bottoming there. We didn't bottom here. We didn't bottom here. So we didn't bottom here. How do you know it's gonna? Nobody truly knows. So get away from it. Wait until, like I said, until it get, as long as it's below 229, I don't even want to think about it. Once it gets above 229, I'll think about it. I'll reassess the situation. Doesn't mean I'm going to go long. I'll reassess the situation. We're on a downtrend. You know, bearish in a minor term, bearish, intermediate term, bearish, and primary term, bearish on every term on test. Let's stay away from it. And I'll end the video with this on Apple. Again, you know, it's one of those things that, hey, I wasn't trying to call top here, you know, we entered long here, we added here, and then we closed most of our positions there. You know, we're holding very, very marginal right now, but we closed almost like, you know, 90, I think about 90% of our positions there. And again, because, you know, with our analysis, target analysis, with some Fibonacci expansion forecast and all that, you know, we just felt that this was the, you know, level that we were comfortable closing most of our positions and protect that gain. It wasn't that I was trying to call top here. And so, and it worked out for our favor. It started coming down, and you know, we held here for a little bit. It looked like possibly some kind of a bull pennant or some sort, or a bull flag. Well, that failed. We tried to do that again below this old support, new resistance level. We failed that again. We lost once we lost that 10-20 MA, once we filled this gap, it was bound to fill this gap. Remember, we talked about this, I think last, I don't know, several webinars or several videos ago. I talked about watch these level. Once we lose 10-20 MA here, watch this level as the next level support. If that loses, we're probably gonna come back, and we did that today. So what's the next level? Well, next level support is this gap. You see that gap right here, the gap fill right here, and the 50 EMA is at this level as well. So what I look at is 121, 119. 121 is 119 is a level of potential support. It is an old resistance, possibly becoming new support there. If I throw a Fibonacci real quick for you guys, I think that's the level also coinciding. You can see that 50% coinciding perfectly with that gap fill right here and that 50 EMA vicinity. So the again, 121, 119, this is a level to watch. And again, I wouldn't recommend just, you know, just because we get there we buy. No, what I want you to do, I want you to look at it. I want you to see a confirmation of a bounce. That's what I'm gonna do. And if we see a confirmation of a bounce, I will add to my position on that on Apple. So. And again, minor term bearish, yeah, minor term bearish in the Apple. However, you tell me, what does it look like in a primary term? Obviously, we're bullish in a primary term. How about intermediate term? I would have to say we're still bullish. We're above 50 MA. We are holding, you know, prior high. So, you know, unless we're below, once we get below that though, that could be a little bit concerning for intermediate term. But as long as we stay above 119, I think that intermediate term we're still bullish. Intermediate term we're still bullish. So hopefully tonight's analysis can be you know, helpful to you. Again, this market is gonna do what it's gonna do. It's gonna have its ups and downs. Nobody can truly forecast that perfectly. Nobody can do that. Sometimes, you know, you get good breaks like I did here. Sometimes, you know, what if this would kept going higher, right? It could have done that too, but it just either way, even if it would kept going higher, I would have still been fine. I would have still be content. I think the biggest problem with the traders is that they're too greedy. They're not content with their gain, and so they're trying to just merely trying to go long here and then trying to close. You can't do that. If you can able to you know, consistently even, you know, grab like 50% of its bullish move, you don't have to go long here. You don't have to close it out here. But if you can able to just grab that. If you can do that consistently, that's good. And be content with it. Even if it continues goes higher, be content with it. Say, hey, that's what I say. I'm content. I tell myself I'm content because of what? There's some other voice tell you, oh my God, you could have more. Man, you should have held it, dude. You could have had some more, bro. Oh my goodness, apples keep going higher, dude. Look at you. You could have gotten more. We're all human beings. That voice is there for all of us. You know what I say? No, I'm cool. I'm fine. I'm very content here. Let it go higher. I'm very content here. And sometimes what you have to do is really talk back to it. Really, it is actually scientifically proven that you have to talk back to yourself so that you're not, you know, influencing yourself in a negative way. They say that, you know, most influencer in your life is yourself. If you're keeping negative about yourself, like I'm fat, I'm ugly, you know, I can't do nothing, you're gonna listen to it. So what you have to really say is, I can achieve all things. I'm gonna continue to work on it. I will fail, but I will come back. I will try it again. I will, I will have seasons that it's gonna be tough for me. I will go through those, but I will continue to work at it, because I will and then I will get better at it. And sometimes that's what we have to do, not just in trading, in life, right? In everything we do, in every aspect of life, sometimes we just gotta talk back to ourselves and sometimes, you know what? There are so many that's the thing about it, is again, I'll close with this. In life, in internet today, online presence, right, there is so strong. We have cell phones, we got these tablets, and we have all these things here now, and we got smart TVs. We're always connected with Twitter alerts and all that stuff. There's so much information out there that if you don't know which information to grasp on, you get overload, and it doesn't help you at all. That's why too much information is not a good information. It doesn't do anything. That's what I'm saying, is that I'll give you this tip here. If you want to day trade, don't listen to me, because it's gonna hinder you. Don't listen to me. Don't follow me, and go find some great day trader out there. I don't know who, but and do that. You want to do short-term swing trade? Find somebody who's like that. But you want to do more of a position trading. You want to do more of a long-term. Hold your trade for 3 to 6 months. And you want to forecast for 3 to 6 months. You want to understand, the primary term, uptrend term. Then you're welcome to follow me. You're welcome to listen to my videos and interact with me. Come to my live events, and do that. But it's just there's so much information. You're listening to everybody because you're like, you think that's not helpful somehow. It's actually not. It's not really helpful. So I think we have to be very, very careful, though, what we listen to, who we listen to, who we follow. Because there's so much information out there. Oh my goodness, there's so much information out there in the World Wide Web, and if we're not careful, we can bring in certain information that is impact us in a negative way. So I just thought I would close with that. Again, next week, I had planned to do live midweek update. It's going to be right after close next Wednesday. Sometimes I do have to cancel these things because, again, you guys know that I run business here locally, so sometimes I get important meetings and things. But as of today, it seems like I'm open next Wednesday, so I'll have time to look at the market today. And again, we'll follow up on the indices. Also, we're gonna look at, remember last Wednesday, or live midweek update, or live event that we did, we looked at some of our positions. We're gonna look at those next Wednesday as well, and then we'll follow up and see where they at today, what happened to them, and what we did with our current positions and stuff. So we'll talk about those again next one. So we'll follow up on some of the indices. We'll follow up some of our positions that we talked about last Wednesday. We'll follow up on Apple and Tesla and see where they at, and we'll go from there. All right. So have a great night. If you have any questions, please use my blog comment section. Again, I'm not on StockTwits. I'm rarely there, so if you ask me questions on StockTwits, I didn't check StockTwits the last 3 days. So I tend to check my Twitter a little bit more often, but I don't have alerts. So you tweet me, I don't get alerts on my phone. I'm not ignoring you. I remove all my alerts. I remove alerts, Facebook alerts, Twitter alerts, everything alert, so I don't get any alerts on my cell phone. Only alert that I'm gonna get on my cell phone will be if you actually leave comments on my blog. Then I will get I'll get an alert on my phone. Doesn't mean I'm gonna reply to you right away, but I'm gonna make sure that I do that. So have a great night. Enjoy your evening. We got 2 more days of market this week. I think we're probably gonna continue to see some up and down, some volatility. Probably gonna see some selling, continue to see some selling pressure. But I think early next week we'll probably see something. Possibly buyers possibly stepping up or something like that. So we'll look at it, and next Wednesday we'll follow through. Right. So have a great evening. We'll talk soon.